Hi there. The billion-dollar valuations of startup unicorns generate excitement and give innovative startups the capital that they need to grow. But they can also put pressure on founders and investors. A unicorn company is a privately held startup with a billion-dollar valuation or more. The term was coined by prominent seed investor Aileen Lee when she wrote about billion-dollar tech startups in the early 2000s. Google and Facebook were among the first startup unicorns. Founded in the 1990s and early 2000s respectively, they quickly shot to a billion-dollar valuation at a time when just 0.07% of the software startups could have reached this status. Since then, the number of unicorn startups has ballooned, and as of 2020, there were more than 600 of them. But does a billion-dollar valuation guarantee success? So in this video, let's talk a bit about the rationale behind startup valuations and how should you, as a common man or an external investor, interpret the situation. Finally, there is a simple yet meaningful advice coming from experts for the young founders of budding startups. But first, take a moment to like this video to retain it as your future reference. And also subscribe to my channel to continue accessing content that will help you to learn, grow, succeed, and find solutions to your varied needs. While the world is reeling under the damaging effects of the COVID outbreak, many startups are raising hundreds of millions of dollars at billions of dollars of valuation. A new unicorn seems to be born every day, valued at $1 billion and more. So here is the question, are we in a bubble? The answer is that no one knows until the bubble bursts. I remember Warren Buffett saying it's only when the tide goes out that you learn who has been swimming naked. The valuation of a startup is nothing but what someone is willing to pay for it, the price at which new investors are willing to invest into the startup. You and I don't need to agree with the valuation. Some of the smartest investors in the world are doing the investing and setting these valuations. That doesn't stop them from being wrong, as was indicated by the dot-com and other busts. But if they're consistently wrong, they will soon be out of business. So timing is everything. Venture capitalists and private equity firms are investing their limited partners' money. Large pension funds and other institutional investors are traditionally conservative investors, but with the bond yields at negative levels in Europe and very low levels in the rest of the world, all these players have been forced to take on more risk to fund their liabilities. Why should you be skeptical of the most valuable startups? See, when a startup is being valued, investors estimate the value of business based on projected growth and their potential rather than the actual profit and revenue. And for this reason, it only takes a handful of optimistic investors for the valuation of a startup to skyrocket. These large valuations tend to give new investors the confidence in the company, allowing it to attract attention, and either they scale up quickly or be acquired, or they are being acquired by a larger organization. However, these high valuations are far from a guarantee of success. These huge valuations are likely to be a very rough estimate, as unicorns are often focused on entirely new markets, technologies, or business models. Very high valuations are associated with equally high levels of risk. Another reason to be skeptical of the valuation of any unicorn is that their figures are usually based on the success of similar companies. In theory, this comparison considers whether there could be a market for a startup's products or services, but these comparisons can also draw false equivalencies. They don't take into account whether the startup is losing money and can therefore lead to hugely inflated valuations that can probably mislead investors. People buy into these companies because they look good and they will overpay because someone else will pay more. A reckless billion-dollar valuation can lead to lower than anticipated return for the investors. The agreements that investors have with a startup can also secretly lower its actual value. Before an IPO, companies are not required to disclose the rights that investors have to the shares, to the dividends, and the cash flow. A couple of professors at the Stanford University have looked at this scenario and they have found that unicorns are valued at 50% more than their actual valuation when you account them for cash flows. When a startup's valuation shoots towards a unicorn status, it can also increase pressure among the would-be investors to get involved even before it takes off. So people will be found saying, oh look, they are going to be a unicorn, and so they will all try and get in before the company's IPO. Despite the investment rushing into the company, this pressure can actually do a startup more harm than good. This investment puts pressure on founders to spend big, hire more talent, open offices, or expand rapidly around the world to capture the market. And those investments increase the burn rate of capital, ensuring that costs far outstrip the revenues. And as a result, the new unicorn is exposed to more risk. However, startup unicorns can lead to more innovation despite the risks. Their excitement and optimism that the valuation of these unicorns create can have a positive impact on the overall startup and innovation ecosystem. Often, early employees leave startup unicorns to pursue projects of their own. The high valuation and the quick growth that they were exposed to becomes an important factor in building the abilities and confidence required to be an entrepreneur. One prominent example, and you may have heard of this, is the trend of the PayPal mafia. Founders and early employees of the fintech giant have gone on to found some of the most successful tech companies of the last decade. For example, PayPal's anti-fraud developer Javed Karim is a co-founder of YouTube. So billion-dollar startup valuations should be approached with caution. Of course, there are startup unicorns that are hugely successful, but valuations are often based on the potential and guesswork more than a concrete analysis. And that can put a lot of pressure on both founders and investors to grow rapidly and take on risks. It's inevitable that you will make a few mistakes while discovering how to value any startup company which has no revenue. So here is a heads up on big pitfalls that you should do your best to avoid. First, never assume a valuation is permanent. In the end, a startup will be worth whatever the investors are willing to invest in it. As a business owner, you may not agree with every valuation that your startup gets. Ultimately, you must remember the variables at play and understand that no valuation, high or low, is ever going to be permanent or even correct. The second is never assume a valuation is straightforward. In business, hardly anything is straightforward. So even when you get a pre-revenue startup valuation you are happy with, it's best to discuss things in great detail with your potential investors just to make sure that everyone is on the same page about how to proceed. So how much is your startup worth? Despite all the downsides that we have discussed, unicorn valuations don't seem to be going anywhere, and the number of startup unicorns is growing and will continue to grow. The buzz that can generate in the business world can help entrepreneurs launch game-changing companies, which can only be a good thing for the future of innovation and the future of this world. For the 99.99% of these founders toiling hard, remember that unicorn valuations are extremely rare. Valuations are a matter of timing and luck, of being in the right sector and finding the right investors. As founders, all you can do is focus on building a lasting company by meeting the deep need of your customers. Use the power of compounding to your advantage. Keep plugging one customer at a time, and slowly but surely it will build a large, lasting business. Chasing vanity metrics, trying to find shortcuts, looking for the latest growth hacks, trying to grow at any cost by incurring huge burn is not the way to go. Value, my friend, is different from valuation. Founders should focus on creating a lot of value for all their stakeholders. Success will surely follow. Hope you found this video useful. Please give me a like and subscribe to my channel to continue accessing content that will help you to learn, grow, succeed, and find solutions to your varied business needs. Thanks for watching.